Today I want to talk about the International Energy Agency oil report and the numbers that it puts out every month. And I want to review those where those numbers have been going over the last year or so and where they're going in the year ahead. We had a dramatic increase in oil prices between the beginning of 21 and the beginning of 22, and that's usually thought of as caused by the war in Ukraine. But really, when we look at the International Energy Agency numbers, what was really happening was there was a global increase in demand happening month by month in terms of the millions of barrels a day that the world was using. And that was that improvement, which was happening well before the invasion of Ukraine, was caused by the recovery in the world economy from the shutdown associated with the pandemic. So the International Energy Agency numbers tell us that in the beginning of 2021, the world was consuming 94.3 million barrels a day of oil. And that had grown up all the way to 100.8 million barrels a day by the end of the year. And while that was happening, supply just couldn't keep pace with demand, and so the price kept going up dramatically. And that really continued up until the middle of 2022, when supply got just ahead of where demand is, and it stayed just ahead of demand really for the next year. And as that happened, oil prices fell from a very high level to a relatively to a much more reasonable number on a pretty small excess amount of supply. The oil price is really sensitive to differences in supply. A 1% difference in supply between supply and demand could increase the oil price by about 12%. So it's very, very dramatic. So what's actually happened now, after a period in which there's been a touch more supply in the oil market than demand, and the oil prices have been declining, we've come to a period really this quarter where two quite different things have happened. One is OPEC has cut supply to the market by 1 million barrels a day, and it's expected that by the International Energy Agency, that they'll keep that cut in place through to the end of the year. And it's at the same time that happens, we've got an increase in demand. And the increase in demand is coming from China, and it's coming from the increase in Chinese demand for jet fuel. This is not about the recovery of their industrial sector, which we know has been slow. This is about the recovery of their services sector. And the recovery of their services sector are generating a lot more air traffic in China. And the International Energy Agency tells us a 70% increase in the Chinese demand for jet fuel. And that's generated a situation where in this quarter, we now have a level of demand estimated by the International Energy Agency of 103 million barrels of oil a day, and supply of only 101 million barrels. So what that tells us, quite obviously, is that we're short 2 million barrels a day. And as I previously pointed out, that has quite a dramatic effect on price, but it has that effect with a lag. So what we anticipate is that deficit, which is about 2 million barrels a day this quarter, will ease slightly to 1.4 million barrels a day next quarter, but that's still a very tight supply situation. And as a result of that, our model tells us that the equilibrium price should go up from about $81 a barrel for Brent in the second quarter to about $94 a barrel in the third quarter, which is the quarter we're in, and rise again to $118 a barrel by the time we get into the first quarter of next year. So it's what's actually happening here is the fact that demand is higher than supply is reducing the stocks of oil that are available to satisfy supply. And as those stocks fall, that drives up price. So we get very rapidly from about $80 a barrel to just under $120 a barrel, $118 a barrel in the beginning of next year. What the International Energy Agency thinks will then happen is really because the world economy Europe is slowing down, the US is slowing down, that there'll be a drop in demand in the first half of next year, in which we'll get back to balance or a very, very slight oversupply. This means that in the second half of next year, the oil price should fall back to, from, as I've said, $120 or close to $120 in the first quarter, down to about $90 a barrel by the end of the year. But then you've got another surge in demand, which drives the price up to a final peak in 2025 of $120 a barrel. So what you've got here is a period of very high volatility in the oil market ahead of us, with an average price between now and the early part of 2025 about $103 a barrel for Brent, surging up to 120 at times and down to 90. But put it simply, in the next few quarters, we are going to see significant strengthening in the Brent oil price, and that will take us up to just under $120 a barrel for Brent in the international market.